everybody. Welcome to the Trading Market Technicals Morning Call video for Friday, October the 4th. Another down day in the markets. Dow is now down 9 out of 11 days. Dow Jones down 136.66. NASDAQ down 40.66. S&P down 15.21. Russell down 11.65. Asia overnight session, a little bit of red, but now in the futures this morning kind of stabilized up about $4. And markets continue to show signs of weakness. No resolution here on the government shutdown, and fiscal cliff is nearing here. So market participants are a little bit leery. Now there are cracks in the armor, so to speak. The indicators are still holding up relatively well, but are mixed. And I am seeing some rotation, some money rotation coming out of different sectors, and that's fine, long as the market continues to stay in line here. But when you start seeing some of the leaders starting to break down now, and money coming out of them and going into some safe haven sectors, that's something that we need to really keep an eye on. Now, we did hit 1663 in the minis, which was my first target. If we get a bounce, I think that bounce will probably get sold into. And again, I still see a deeper downside correction here. I've been stating this for the last several weeks. I think we do get a bounce. The market is oversold. Now, on the McClellan oscillator is not telling us that. So that means that we can bounce here in our indicator. If you look over here, we can get into this back up to the 2030 plus 2030, which would be a neutral area, and then really fall hard. Or we could literally just obviously fall out of bed here now and get oversold, bounce, and then do it again, sort of like what happened here. So I do think that there's definitely some downside correction to come, further downside correction to come, but I would not rule out a snapback rally, especially you are still in a bull market, and if the markets are deeply oversold like they are now in the short term, we can get a really, really hard rally to the upside, and then that would really kind of fake all of the market participants, or the weak hands would be sold. Then they say they want to buy them again because we're going to go to new highs, and only to sell off again. That's my analogy. That's just not tradable. It's just my thoughts of what I'm expecting. Price is what pays us, and that's what we're going to be following, is what price does. So, quick recap, I'm looking for a bounce here. Again, I'm looking for some sort of a weak bounce, and I'll show you some of the levels when we get to the chart segment. And then one more time, sell off, take out yesterday's low, below 1663, probably to the June 24th lows, or even the 200-day moving average in most of the indexes, and then start some sort of a rally going into the end of the year. That's still just a little bit of the medium-term picture for the rest of 2013. Again, things could fall apart in the government here, and we can really sell off and be very weak going into the end of the year. That could be very possible, but I don't think that's going to happen. But again, let's let price tell us what to do and what to trade. Okay, so let's go into the rest of the stuff that I want to show you here. Okay, I wanted to show you some of the bullish percent indexes here, and we have the NYMO. Take a look at the bullish percent SPX. We are still on a sell signal here. We did touch it, and then we rolled back down again. So as you can see here, no bullish sign at all. We're still now, the average and the moving average is starting to really separate here, which tells me that there's more momentum to the downside. Take a look at the dollar. Dollar really hasn't done much yesterday. Put in a little bit of a hammer here, but again, still relatively weak in a downtrend, making lower lows and lower highs. So something to keep an eye on. Watch the dollar every day. I sure do. Let's take a look at the XLF. The XLF here, now here's an encouraging sign. The XLF bullish percent financial sector actually turned positive yesterday, while it was relatively weak. And as I mentioned, here we have a head and shoulders pattern, which triggered and back tested and now actually sold off. So if you were following these videos, you would have actually got in below the 20, below the neckline again on the way down, and you would have got made a nice little trade there. If you were looking to obviously, if that's your thing in your trading plan. But again, looking at this just by a proxy here, saying that the XLF is relatively weak and it is not participating or holding up relatively well to what the market is doing here. This is starting to break down again even more. However, we see this is a good sign. Now, if we bounce today, let's see what the financials do, and it's going to be important to see. All right, so let's take a look at New York Stock Exchange, new highs, new lows. Still above zero. Came back down again from the previous day, but again, holding up relatively well. I'm not going to show you all of the indicators. What I showed you yesterday, there really was no change. Still holding up okay. So that's something just to kind of keep an eye on. All right, so stocks above the 50-day moving average starting to break down again. Now we're at the 53%. It wouldn't even I wouldn't mind back down to the 27 to 30 here. This is where you relatively get a good bounce in the market. That would coincide nicely with the McClellan oscillator breaking down and obviously getting us into oversold territory. So that's something nice to see. I would like to see, actually. Same thing with the stocks above the 200-day moving average. I'd like to see us get down into that 340, 360 area, somewhere in here, and then let's see some sort of a bounce. So that is what I'm looking at for some symmetry here in the indexes. All selling off, all getting into some key support areas, and then bounce. All right, now, let's take a look at the VIX. Now, the VIX is outside the band again, okay? But you have all of this craziness going on with the government, shootings in Washington, D.C., so we have more fear coming into the market, which is expected, and that's fine. But where do we go from here? We are now at resistance, so I do see us. Well, actually, let me rephrase that. If the markets can get back down, if the VIX can get back down, back into this band again, we will start to have another buy signal. It doesn't trigger until the following day. So we need a pullback today, and then on Monday we need to continue to move lower in the VIX to actually trigger a buy signal in equity. So starting out to be that way, doesn't have to. We can actually move higher and break out here. But this is what's been pretty much capped all of 2013. As you can see, we're in this big channel here. We did have that big pop up, and then we move lower. So just keep an eye. Let's see what happens for today. But interesting developments. Maybe, just maybe, we get some sort of a dead cat bounce here. Okay. Let's take a look at some of the metals. Got a couple of emails. What do you think? What do you think? I think gold is a short. I do not like it here to be short. Again, my area is going to be starting at 1416 to the 1425 area, 1430ish area, right up in here, anywhere between here and the 200-day moving average. I don't like it long at all. If it's going to be long, it's going to be down at the 1000 or the 1100 area. Again, remember, longer term, gold is in a bear market here. It's going to really need to get going to prove itself that it's going to get back into bullish territory. So let's take a look at our main sleeper. Here is one of what you should be following is platinum. Platinum here, no signs of popping, as you can see. So that's why I would not be looking to buy gold. If anything, I'm a short seller of gold. I'd be selling gold short on any good size bounces. Here's our quiet leader, right? Palladium. As you can see here, what does that tell you? Absolutely nothing. Lower highs, lower lows, and lower highs. This is also in a downtrend. So this does not tell me anything that I'm looking to buy gold. This is the leader of all of the metals. So I'm not looking too good here, guys. So that's why just, again, use caution if you're looking to play gold. Man, a day trade, it's one thing. But okay, so we are now possibly looking to cross back over. Again, now the USO, if you want to try it again for when we had that call buying the USO over here, very easy to manage, and I'll show that to you on the chart segment right here. We had called a buy the other day of USO above this high at 36.78. We did get a nice rally up. Again, it's a one-hit wonder, guys. This is a retracement rally. So when you play retracement rallies, you got good profits. You got to take them because obviously you're just retracing this bearish trend. We are still in a downtrend, lower lows and lower highs. So now, obviously, it could break higher, but at the time, we're just looking for a retracement rally. Easy to manage. You have your support area here, your stops, which is just below that. Now we have a pullback. Okay, if the pullback comes in and it's maintained above this area, the support line, and it can chop around a little bit in here and takes out that area, then sure, then you could take that play again and retrace higher. And then if it get back in this area here and consolidate a little bit more, then I think you might have some fuel to further upside. Otherwise, if it breaks, then your first area is going to be the 200-day moving average, and of course this lower end of this support area of $32. So right now, I would not be looking to buy gold. Not be looking to buy crude oil at the moment via the USO. So just sit back, take it easy, and let the markets really give you the ideas. Right now, the markets have sort of like the bad volatility. We're not really we're selling off, but we're selling off. We're just grinding lower every day, or we're gapping down. So longs aren't really a great play unless you have relative strength to the markets, and that's far and few in between. And even then, you're not going to get much movement to the upside because you have this overhang in the market. And if you're looking to short the market, being short at these levels, even intraday, the risk reward just isn't there. So I like to play the best setups, and if I don't find them, that's great. It gets me out of what's going on here, and then when the markets do become in sync in the next few days, even if played retracement rally, we'll have plenty of opportunity. You don't want to get caught into this chop, and then you're like a scared kitten when the market starts to really get going again. Okay. Just a quick look at the GLD. Again, back up to this area here, guys. Anywhere from the 137, 139-ish. Other than that, we're in no man's land. Now, we could break down and flush right to here and then take out the lows. That's true, and you would miss it. But remember, it's all about probability here when you're trading. Okay, so what I did here in the spiders, and I'm going to put the lines in here for you, but I just wanted to show you, I did a Fibonacci retracement, low to high here, and I'm looking for clusters. And sure enough, right up in here, this area is a big cluster, a Fibonacci cluster that's coming into this area here. Now, if we lose this area, okay, expect this area here of 162, and then, of course, the 200-day moving average. So you're going to have one downside target has been met of 166. I'll label these over the weekend for you, and we will have the next target's going to be 162, and then a 200-day moving average, okay? Most of the indexes are very similar in pattern, and I'll show that to you as well. 30-minute SPY, again, as you can see, just a slow grind, gap down, move up, gap down, sideways consolidation, slightly grind higher, and then a big gap lower, a pop in the intraday, and a sell-off. So, excuse me, very orderly. That's one thing that I would say. I don't see a lot of panic here. Yesterday, a little bit, what was going on with Washington, with the shootings over there. But I do see this being pretty orderly, so I do see a little bit of a bullishness coming out of this sell-off at the moment. Okay, same thing with the diamonds. Just wanted to show you here. I know it's a bunch of squiggly lines. I'll take care of it. I'll clean it up, but I want to show you what I got from here, low to high, and we got a nice cluster coming in right here at 149.60. Again, your next area will be this area, 147.59 in the diamonds, and then your 200-day moving average here. And then, of course, lower would be here, this June 24th low of 145. And again, I'll relabel it, but I just want to show you where I'm getting these targets, these downside targets. IWM holding up again relatively well. However, we are seeing some cracks here. I don't like to see the leaders starting to break down. Now, we did have the transports, the Russell, and of course the Qs, technology, holding up relatively well. If we see these cracks start to break, this is not a good sign, and that means that money is coming out of the leaders and probably going into some safety haven. Now, that's where I'm looking at, patiently waiting to see what the dollar does. Right now, the dollar is taking a beating because of what's going on with the Fed, and so we want to see if the dollar regains control here. That's why it's critical to watch what the dollar does, even though the dollar is selling off at the moment. Transportation sector, holding up relatively well. We are below the 20, but we are above the 50 and the 200 and this November 2012 uptrend line. So this is holding up relatively well. But again, it could easily break down here. We need to see these leaders continue to hold up. So when we do get this retracement rally, we should actually pop and really give us a good move to the upside. Here is Goldman Sachs. Again, what can I say? Banks need to follow suit here. They are not stepping up. They really need to step up to the plate. Goldman here just really, really weak. Came out of this small bullish falling wedge, broke back down, testing the upper end of this wedge. But if we start to lose this low here, or let's just put yesterday's low in perspective. If we lose the 155.31, you're going to get an easy flush to the 200-day moving average, which would coincide with the June 24th lows. And that's not going to be a good sign. And as you can see here, we're barely clinging to the uptrend line, and we need to hold this uptrend line. If we do hold, we're going to probably flush to the June 24th lows, and then again, next target would be the 200-day moving average. If you're trading this sector, these are the areas what you want to look at. Even if you're not, you need to pay attention to what the financials are doing. Apple, what can I say, rolled over, obviously with the market. Again, Going to need to hold this pivotal low here, or otherwise we're going to probably test the 200 or this area here coming back from September 17th. Again, just a real mess right now. I would stay away from it until it gets a real good pop or a big flush to the downside. And then lastly is the Qs, as you can see here. Hold up relatively well, still okay. So some of the leaders are still holding up, and they're going to need to hold up because we're going to need to get a good push to the upside where we can get some momentum. Now remember, guys, there's a lot of people, a lot of traders, a lot of market participants that are probably still long this market at way up above. And my guess is that they're going to look to try to take their position off when we get a bounce. And then if that happens, we'll probably end up getting that one more flush that I'm looking for. Remember, the markets are made to fool the masses. Keep that in mind. All right, guys, have a great weekend. Enjoy, get some rest, and we'll have a full update on Monday. Take care.